So we tested manual addition and asset creation through spreadsheet, which we call as ADFDI, mass addition, asset creation based on invoice lines, which are coming from payables, asset creation based on project related line, capital project line from PPM also we call as mass additions, but that is not in the scope of our learning. That's completely PPM related. However, we are transferring the asset lines from AP to FA. The same way, we can transfer asset lines from project costing application to fixed assets if the project type is capital project within the PPM. Also, we have seen merge and split. When you create multiple lines within the payables of interfacing to fixed assets, those all lines you can merge to create the single asset. If you create single line within the AP or it may be within the projects, you can interface that line to fixed assets and you can split into multiple lines to create the multiple assets. I will pick the topic called as CIP asset. So far the assets whatever we created, those we call as capitalized assets, means ready to use or in usage. CIP means which is under capitalization. Okay, CIP, capitalization progress. So you are constructing one building. So you want to create that as asset. Construction is not completed, or else you purchase one plant, installation will take 1 month time. But you want to add that asset into system as you have an asset, and you can maintain the status as it is CIP asset. Machinery, the plant installation will take 1 month time. Till 1 month time, you'll maintain it as CIP. Later you can convert into capitalized, or else it could be building or anything else. So which is under capitalization process that you can call CIP asset. Later you can convert. When you create any asset as CIP asset, you cannot add the cost once it is capitalized, or else later you can add cost and you can capitalize. But during the asset creation, you cannot add any cost. We'll see how to create CIP, how to add the cost, how we can convert CIP asset as a capitalized asset. Go to asset work area. Fixed assets. Just click on add asset. Select asset type as a CIP asset. Select asset type as a CIP asset. Select category. And another point, we are going to create the CIP asset. What are the category we are using? Within the category, we have to maintain the CIP accounts. System will validate. If CIP accounts are available in the category, then it will allow us to create the CIP asset. So we don't have any CIP accounts within the category. So we'll go and add. So manage asset categories. Select our corporate book. And find out categories which are associated with our corporate book. Only one. Select the same. Click on edit. And here provide CIP accounts. One is CIP cost, other one is CIP clearing. Okay, however, we have asset cost and asset clearing. The same way, CIP cost and CIP clearing. So select CIP cost account. And here provide CIP clearing account. For testing, you may use the same account. The issue, say save and close. Done. Now we added CIP cost and clearing accounts within the specific category. Now that category we can use to create the CIP assets. Click on add asset, select type as CIP. The moment you select type as CIP, the cost field is freezed. When it was capitalized, yes, you can, it's a free text field, you can enter like cost. In case of CIP, you cannot enter the cost directly. We'll see how to deal with that. So select major category value and pick minor category value and say OK. A, B, C. And units, number of units, say 1 unit. Yes. And provide expense account. This account will be useful once asset is capitalized when you calculate depreciation. Say OK. And select location. Now we are not able to provide the cost. Now click on, if you want to, now you can click on submit. Asset would be created without any cost since this is CIP asset. Whenever the capitalization is complete, you can come back to the same asset and you can add the cost and you will be able to capitalize it. Or else you want to add cost now itself. Yes, you can do. We have an alternate option. Directly you cannot enter. Say you are constructing building, but as of now, you know what is the cost you incurred. You want to add it. So to add that cost, click on next. If you want to provide asset key, you can provide. Scroll little down. Go to financial details, expand. Under financial details, there is a tab called as source lines. Click on source lines. Under source lines, we have a provision to add the cost. Click on add row. Click on add row, enter amount. So how much amount? So 25 lakhs. Maybe later you can come back to the same asset and add additional source lines. This is how you can keep adding. Once construction is complete, with all this cost, you can capitalize this asset. This is how you can add, say save, submit. Now we have one CIP. Okay, we have one CIP asset. Now system is converting this line as asset. That is the reason it is showing as ready to post. You no need to post. It will auto post the moment you provide the data and submit. If you refresh this page, you could see it won't be available for any further action. Convert it as asset. If you want to check, go to asset inquiry, recent additions. Okay. This is asset we created ABC. Click on asset number. Asset type is CIP asset. Now we want to convert this CIP asset, and again you may add the cost. That's how you can keep adding. Once construction is completed, in case of building or in case of machinery installation is complete, so you can go to task pan, and here is the task. Capitalize CIP assets. Click on capitalize CIP assets, and the description we given for asset is ABC. We have one more. This is the one. Select, click on capitalize. Say okay. Done. Now check the status. Go to acquire assets. The recent additions. Now the description is ABC. Click on the same asset number. Now see asset type is converted to capitalized. This is how you can add CIP assets. If you want to add the cost during the addition, you can add it. Or else create CIP asset without any cost. Then go back to the CIP asset at any point of time under financial details. So by using the source lines, you can keep adding the cost based on how much cost you incur to capitalize that asset. Okay, for the construction of asset, whatever you call it. So that's how you can create the CAP and you can convert the CAP into capitalized assets. And we have a concept called as asset reclassification. It's very simple.
Lakshman,
Yep.
can you please give some basic example, like a normal common example of CIP asset and capitalization? When I understood
You
what
joined late or what?
included. No.
No, okay, fine. Let me explain then. That's what example I took. You are constructing one building. Okay. Building construction will take 1 year time. Till 1 year time, the asset you can you can create a building in the system. Say 1 year duration construction. 6 months completed or else 1 month completed. You create asset in the system. 1 month, how much cost you incurred, will be adding that cost. Every 1 month, you may add the cost, how much you realized, incurred. After 1 month, after 1 year, you will convert as a CIP asset. So you will convert as a capitalized asset.
So initially, when
Other
we are
example
creating the
also I
system,
took.
that time we are calling it as.
Yeah,
I'm
please
just
go ahead.
trying to understand. So when we are creating it, that time we are calling it as CIP asset, and then after 1 year,
No,
then we are calling
don't
it as.
look at system point of view to understand. Look at the reality. It's not like when you're creating and all. You are constructing one building. Okay, forget about system. Outside you are constructing one building. That information you want to maintain in the system. Okay, still you are constructing. It is not ready for usage. That kind of asset you can create in the system as a CA. Or else you have one building which is already constructed. Now how you have to take that asset into the system, CIP or capitalized?
Capitalized.
That's it. Building you have which is under construction. How you have to record in the system?
Then CIP.
That's it. This is what we have to understand. Yeah. The same way you take example of plant. You purchase one plant, but the installation and all will take 1 month. Till 1 month time, it won't be ready to use. Okay. So you have to install. Maybe some base we have to build and we have to do some other arrangements, etc. Till that 1 month you treat as a CIP asset. Later you may incur the cost and you may do some other activities to install and keep ready. Once that is done, the same CIP will convert into capitalized asset. Which is
okay. Now understood. Thank you.
Yeah, if it is asset, it is a building construction. If it is some other asset, it may be in the capitalization process.
Sir, this expense account, what we have given while creating it, so that this cost will go to that account, right?
No, 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 no. Cost will go to asset cost account. The category level asset cost, asset clearing account we have, right? Billing account we given.
Yeah.
Expense account, what happens when you calculate the depreciation for this asset?
Hmm.
The depreciation amount will go to expense account.
But this is not start well, like we haven't started it using, so why will be
Correct,
calculated
correct.
depreciation?
Later, will you start or not? You have to provide now
Yes.
only.
Oh,
See, you are creating
okay.
asset. Okay.
Hmm. Hmm.
Later, you will calculate the depreciation, right?
Right.
Now itself, you are giving that account. Whenever you calculate the depreciation, system will use that account to hit that balances into that account.
So that will be normal depreciation account only, right? In that
Correct.
case.
That only, that expense account is nothing but depreciation account only.
Okay. Okay. Understood.
Yeah. Reclassification. Reclassification, nothing but changing category for the asset. Say you created an asset. So you created an asset as a office building. Now what you are doing is you are changing all office buildings into shopping complex. You are just changing, converted reality. The system also you have to update. Or else by mistake you take your own asset into wrong category. Now you want to change. You can use the concept called as reclassification. Reclassification nothing but changing asset category. So maybe by mistake you selected wrong category and you are changing, or else yes, you selected right category. Over the period of time, the buildings what you are using for office purpose, so you just convert into some commercial purpose or some other residential purpose. Accordingly, you have to change the category. To test this functionality, we need one more category. As of now, we have only one category. We'll go and add one more category so that we'll be able to test. So create one more asset category. So we have category with a combination of this XX building, office building. Let's create another category called as shopping complex category. So assign this category to our corporate book, Alt INC. So asset cost account. The category for the purpose of building. So provide building related account. Here take depreciation expense account. This only system will take during the asset creation. It will take only the depreciation expense account that you have remaining code combination you have to enter. And go to default rules, click on add, straight line depreciation, life, say 50 years, select prorate convention and retirement convention, full month, save and close. Now total we have two categories. We'll go and test how we can change asset category. Go to task pan and go to adjust assets. Go to adjust assets task from the panel and find asset. Okay, which asset you want to change the category. Find all assets, we'll choose one. So now we have an asset called as XYZ asset. Okay. So XYZ asset for this, or else anything you can take. Say 1, 2, 3 building, I want to change the category. 1, 2, 3 building, I want to change the category. Select asset, and here we have a tab called as change category. Click on change category. So at present, this asset is in this category, office building. You don't need to read all the time. Major category value, our primary focus would be minor category. It belongs to office building category. Now we are changing from office building to shopping complex. So here is the new category to update the information. So XX major category. Shopping complex. Already the combination we created, system will allow. Say okay. If you want to write the comments, you can write. Maybe user by mistake selected, so we are changing, we are reclassifying, or else the purpose of buildings usage got changed. That is in those comments you can write. Click on submit, and click on done. So this is how just you can update the category for existing assets. At any point of time, you can do this. And when we talk about depreciation, we have a two modes. One is draft mode depreciation. The other one is final mode depreciation. In fixed assets, first we have to run the draft mode depreciation, and we will go through the depreciation, how much system is calculating. If everything is fine, we can run the final mode depreciation. What is the difference between draft mode and final mode here? So even accounting point of view also, we have seen draft and final, or final post to ledger and payables already application. Here is a related depreciation, it's not related to accounting. If you run the draft mode depreciation, system will calculate the sample depreciation and the period status will remain open. If you run the final mode depreciation, system will calculate the final depreciation, and it will close the period automatically. It will close the current period. At the same time, it will open the next period automatically. In case of draft mode depreciation, system will not close the current period, and it will create just sample accounting. Only one action, that is sample depreciation, it will calculate, not accounting. Sample depreciation it will calculate. If it is a final, it will create the final depreciation, it will calculate the final depreciation, and it will close the current period, and it will open the next period. So in the fixed assets, always we run the draft mode depreciation first, and we'll review if everything is fine, then we'll move to final mode depreciation. We'll see that how to run the draft mode. And again, you cannot run the depreciation for a specific asset or a specific category. You have to run the depreciation at a time for entire your corporate book. Entire corporate book. If you have multiple books, one by one book, we have to run this. We'll see that. So here you have a depreciation infolet. Click on the same, and you can see how many assets are created. Within this month, Feb, we created 11 assets. Now we have a tab called as calculate depreciation. If you click on drop down, close period is another value. Closed period is nothing but final mode depreciation. Here what you see directly calculate depreciation, it is draft mode. If not from here, you can go to task pan, go to manage all books, and here also you can see the same book. And if you click on calculate depreciation, it will calculate the draft mode. If you want to calculate the final mode, here is the tab, close period. Okay, so that's how it is. Click on that. From any just navigation you can follow. Let's do from here. Click on calculate depreciation. Now go to asset acquiry. Check the depreciation for all the assets or any specific asset. Select first one, and you can see the depreciation calculated is this much. 1 second here, so you can go to depreciation tab. Okay. So this is the depreciation. So this much it is calculating. How it is calculating? It is taking the total cost of asset by number of periods, and evenly it is calculating. So this much amount. Now it's a draft mode. Okay, it is not a final mode. It's a draft mode depreciation. We calculate any asset. You can select ABC. There is a depreciation. You select this ABC building. There is a depreciation. You select cloud building. There is a depreciation. Same like other 1, 2, 3 building. Different depreciation. XYZ asset. Different depreciation. Okay. So this is all just you can see depreciation we calculated, but period status will remain open. You see February period is open. So say you calculated depreciation. Now you identified for one of the assets, system is not calculated depreciation properly, something wrong. Now you can go to that asset and you can do the modification. When you do the modification, automatically system will roll back the depreciation. Means system will undo the depreciation for that specific asset. So you have a multiple assets. For one of the asset, you are going to do some changes. You submit a draft mode depreciation, you identified the system is calculating more or less depreciation for that asset, not exactly what is required. Then go and do the required changes. You may change the lifetime, you may increase the lifetime, or you may change cost related information. What went wrong, you can correct it. Already we calculated draft mode depreciation. What system will do? System will undo that depreciation only for that asset. That we call as rollback depreciation. Okay, that we call as rollback depreciation. Rollback depreciation means so you calculated depreciation. What you calculated draft mode depreciation, sample depreciation. When you calculate sample mode, the sample depreciation, if you go and do some changes to asset, whatever the sample depreciation is calculated, system will undo. System will perform undo. That activity we call as rollback depreciation. Now we'll go and test whether system is going to roll back or not. And again, this rollback system will perform automatically if we go and do some changes. And again, this is applicable only in case of draft mode. Remember these points. Okay. So when you run the draft mode depreciation, system will calculate sample depreciation. If you go and do some changes to any asset, system will undo this draft mode depreciation. Say for example, you calculated final mode depreciation, you identified something went wrong for so and so asset. If you go and do some changes to that asset, system is not going to roll back your depreciation. Those changes will reflect in the upcoming periods. So only rollback depreciation is applicable only in case of draft mode, not in the final mode. What system will do as a rollback? Whatever the depreciation is calculated, if you go and do some changes against that asset, system will undo. Again, you can run the draft mode. Then it will calculate the correct depreciation. If everything is fine with all the assets, the depreciation what system is calculating, then you can go ahead to run the final mode depreciation. So these are the points we have to understand. As of now, draft mode depreciation already we calculated. We'll take one of the asset for our just use case and we will perform this rollback. Take any one of the
Sorry,
asset.
hello.
Yep.
Lakshman, in article there is no draft mode kind of thing, right? Directly it is a depreciation running the depreciation. Any changes, entire thing it will roll back, right? It
Have
is.
you worked on assets in R12?
Yes, yes, yes. Yeah.
Then you should be able to know that we have.
Mm,
Yeah, EBS also we have. EBS 11A we have, EBS R12 we have. Yep. We
There
have.
is a checkbox available. Is it a
Yes.
final mode or a draft mode? If
Yes.
if you do the final mode, it will give you a warning. Once the period is closed, you cannot reopen it. Do you still want to run the final mode? That's what the system asks.
Yeah. Yes, you have to go and there will be small pop-up when you click on run depreciation, small pop-up window will open. You have to select your corporate book or a tax book, whatever. Then if you directly click, it will become draft. If you enable the checkbox called as close period, here same, no difference, no difference. The same values here also we have. If you are enabling that checkbox here, what we are doing here, the difference is so simple. If you go here, if you click on this, in EBS, this is how your asset book will be selected in the pop-up. Directly, if you click on run, there will be tab called as run. That will become draft. Under that, there will be one checkbox like close period, final.
Yeah, that's
Yeah.
fine. That's what I'm asking. Close the period. If it is, we cannot open it. Okay, so again we cannot run it.
No, you are
So
not
that is.
asking that. You are asking draft mode is not there in EBS. That is the point we are discussing. We are not talking about this. Okay.
Okay. Yeah, draft mode also same like closing the period is the final mode.
No. That's what we have to understand. Draft mode is draft only. Okay. Same as EBS. Draft mode means you are not closing the period. You are running the depreciation
Yeah.
without closing the period.
Okay.
If you have still question, let me know. We'll discuss.
Okay.
Okay. Fine.
Lakshman,
Yeah.
if we have not ran in the final mode and try to close the GL period, it will allow
Yes, it will allow.
since it is legal entry level asset.
Yeah, it will allow. It will allow. Still, you can set that controls also. The GL side, there is one setup. You can go and set without closing this. See, by default, the system will allow you to close GL period, even all subledger periods are open by default.
Okay.
Yep. That's how by default functionality.
Mm.
You want to set controls, you can set. Fine. So now we'll go and pick one asset. Okay. I'll just pick an asset called cloud building. If you look at cloud building, here system calculated depreciation. System calculated depreciation, so draft mode depreciation we have. Now we'll go and do some changes to this asset. So asset number, just click on done. Go to task pan, click on adjust assets. Find, select asset record. Now click on change financial details. Financial detail means which will impact the depreciation calculation, the cost, depreciation method, etc. So select asset record, click on change financial details. Now you may change the asset cost, you may change the depreciation method, or you may change life of asset, or you may change any other details. Whatever it may be, it will undo the depreciation. For example, for our testing, I'll make it as 45. Submit. Done. Now we did few changes. See, system is taking that as adjustment. Okay. Now go back to the same asset. Acquire assets. Provide asset number. Search. It's better you don't give asset number. We know asset name is cloud building. I'm selecting XYZ asset. You can see the depreciation. 1, 2, 3 building depreciation is there. ABC building depreciation is there. But if you go to the cloud building, where asset number ends with 8, here, this one, 1 8, there won't be any depreciation. No depreciation. Because it was draft mode. When you do the changes to asset, it will undo the depreciation. After system, once system will undo, again you can run the draft mode depreciation. As per changes, it will calculate the depreciation. This we call as draft mode. Okay, draft mode depreciation and rollback. In EBS, yes, in EBS also we have this rollback. In EBS 11i, manually we have to go and run the rollback. But in EBS R12, they automated. In the Fusion also, as these they carry forward. Okay. So that's all about rollback depreciation. So when it is applicable, when you run the depreciation, if it is a draft mode. In case of final mode, if you run the depreciation final mode, system will calculate the final depreciation. It will close the current period and it will reopen the next. It will open the next period. If you go and do the changes, draft rollback is not applicable. This is what we have to understand the story of rollback. Yeah, please, any questions, please?
Sir, this rollback thing, so we like it roll back the depreciation for that asset for which we made the changes. Can we undo the depreciation for all asset? Like, for example, if we just want to see
Yeah,
how
go and do changes. Go and do changes. If changes, if you made, then only the some rollback required. Okay, manually, automatically, you cannot do that activity. Simple, like you can go and run one more time draft mode. If any changes are applicable, system will calculate accordingly. Any changes, how those will be applicable if you do changes only. When you do, automatically it will happen. That's it.
Okay. And sir, in draft mode, I mean, draft is something which is not going to GL. So how can we close GL in that case if we have run it in draft mode only?
Nothing. We are running the sample only, right?
Hmm.
We are not sending to GL. Draft mode means we are not creating the final. We are not doing any final action. We are testing. It's a preview, not review.
Okay. Hmm.
In AP also we created accounting entries, right?
Draft accounting, right? Yeah.
Draft means what it will do?
We can just say like
That's it.
what's going to
You can
happen, like
see.
how much is the depreciation, what
Yes,
is
yes.
accounting.
If you create the final accounting, how system will create? If I submit final accounting, how it is going to create, you want to see. That's all. It is not real action. It is just to preview. Before you do some action, if you want to have a preview, that you can call here as a draft.
So in draft mode, we will not see anything in GL side. It will just be in FA side,
Nothing,
right?
nothing. There is no
Okay.
real action, right?
Okay.
Yeah,
So
there is no, it's not real action. It is just a preview. Without doing, you want to see result.
okay.
It could be AP accounting draft or AR accounting or any application accounting, or it could be depreciation. If it is a draft means within that application only just temporary record it will generate. Okay. You can
Okay.
see, and nothing will become permanent. Draft is just a draft will remain till you take the action of final.
Okay. Okay. Yeah.
It won't create accounting, it won't create any additional records. No. Okay. Right.
Okay.
So that's all about rollback. Now let's talk about, we'll see the final after some time. Okay, we'll see the final after some time. So let's talk about mass copy.
Lakshman, when after posting the asset, we cannot split and we cannot merge, right?
Yes, yes, yes. Only that the split or merge works when those are available as a lines which are coming from payables or projects. Once you converted, no action you can perform.
Okay.
Okay. And if you want, if you have a like what you can do is you have a requirement you created within the same asset, you want to change the units, that you can change. They are giving units, right?
Yes, correct.
Those units you can change. For example, you given 2 units and same expense account and the same location. Now you want to change it. 1 unit you are, say 2 vehicles you have. 2 vehicles are located in the same location. Now you are just moving one location to one vehicle to another location. There you can do the update. That sort of updates you can do, but not overall splitting and merging what we did in case of mass addition process. That is
Okay.
not possible. Yeah. Fine. Now, what is this mass copy? Why we have to do? Say we have a corporate book. Okay, corporate book. So, as per corporate book, by using corporate book, we maintain the assets. Say we created 100 assets and we calculate depreciation. Okay, we calculate depreciation. So corporate book always we maintain as per Companies Act. As per Companies Act, within the whatever the assets we maintain in the corporate book, we calculate the depreciation. So the Company Act says for building, just example I'm taking. Okay, Companies Act says you can claim the depreciation for buildings only 40 years. Okay, Company Act says you can claim the depreciation for buildings 40 years. But there is IT Act. There is IT Act. IT Act says for buildings, you can calculate, you can claim the depreciation 45 years. If you maintain asset in the corporate book, you can calculate only one depreciation only. In one book for one asset, only one depreciation you can apply. But as per Companies Act, you have to calculate depreciation by taking asset life as 40. As per IT Act allows to claim the depreciation up to 45 years or else less than that, or say 35 years. They are giving, you will be able to claim your depreciation within 35 years. That is good news. Anyway, there could be some difference, or else your Company Act may says you have to calculate straight line depreciation, and your IT Act may says you have to claim calculate depreciation as per written down value method. Okay, written down value, WDV. Straight line means very simple. You have asset 10,000, lifetime is 10 months. So 10,000 by 10 it will take every month 1,000. If you take asset value as 10,000, Written down value means fixed percentage, 10%. Every month 10%. So first month on 10,000, 10% means first month you'll calculate 1,000. First month. Remaining value would be 9,000. I think we discussed already. So here 900 in the second month, remaining value would be 8,000, 100 and 8,000, 810 in the third month. The remaining value, fixed percentage till the asset value will turn into zero, that is written down value, and this is a straight line. Take example, the company Act says straight line you have to follow, but IT Act says written down value you have to follow, or else the two acts may say same depreciation method. Okay, same depreciation method you have to follow. Okay, depending on the country, same both maybe IT Act and this act says that written down value you have to follow, or else it may be like for few assets we have to use the written down value method. For rest of all assets you have to use straight line or else vice versa. So in those scenarios, so we cannot apply two depreciation methods for one asset by keeping that asset in one book. That is the reason what we do is we'll create one more book called as tax book as per IT Act. And these 100 assets what we have, we are not going to create in the tax book. Just we'll copy. And within this tax book, we'll set lifetime as for this 100 assets 35 years. And you may use written down value or you may use the same straight line also. Here it may be 40 years, here it may be 35. Here and here depreciation method may be same. You may use straight line here also. How it is in that country according. Straight line, both cases, IT Act, Companies Acts allows straight line. They just they given the directions straight line, and here 40 years you can claim depreciation, here 35, but both cannot be possible. Two different depreciation years of amounts you cannot calculate. That is the reason create tax book, copy assets from corporate book to tax book, calculate depreciation as per IT Act. So the process of copying assets from corporate book to tax book we call as mass copy. Mass copy. Mass means here multiple assets. Okay. So mass copy, multiple assets at a time you can copy from corporate book to tax book. You can calculate depreciation in the tax book as per IT Act. So this is the concept. Now, say I have these 100 assets in corporate book. These assets I maintained in the specific categories. Now, if you want to move these 100 assets to tax book, these 100 assets you have in the corporate book in how many categories? All the categories you have to assign to tax book also. So what we have to do, we have to assign all the categories to tax book. Before assigning the categories to tax book, you have to create the tax book. You have to create tax book. First, you have to create the tax book. And now if you want to copy these 100 assets to tax book, these 100 assets in how many categories we have in the corporate book? Those all categories also we have to assign. Now we have 11 assets. 11 assets we have in how many categories?
Two categories.
Two categories. In first category, office building, how many assets we have? 10 assets we have, right? Total 11 assets, because one asset we reclassified. So 10 assets we have in the office buildings category, one asset we have in the shopping complex category. Now, if you assign the first category to tax book, only 10 assets you can copy. If you assign shopping complex category to tax book, within the shopping complex category you have one asset, that asset also you can copy to tax book. So take the point as assign asset category to tax book. And before you perform this step, assign tax book to user roles. We assign corporate book to user roles to the roles called as asset accountant and asset accounting manager. Now tax book also you have to assign to the same role. Assign tax book to FA roles or FA user roles you may call. After assigning the default action, run LDAP. Then assign category to tax book. And
Actually, this
you can
mass copy still we use for even I have a lifetime of 40 years, even tax book and depreciation method has same straight line also. Still we need a tax book.
still we use because you have to do reporting according, because for whatever the scenario you mentioned, it may be applicable for few assets. Say
Okay.
you have different category of assets. Buildings may be 40 okay, and furniture it could be different. Vehicle it could be different or same. But this total information what you are calculating tax book, you have to consolidate it, you have to report to the government, right?
Okay. Okay.
Even same for few assets is may be same, life may be same, depreciation method may be same. The other version of depreciation is required as per IT Act. Yeah.
Okay.
Even for all assets same also. Okay, but you have IT Act. There is a need of reporting. You have to do this.
Okay, Lakshman, got it.
Yeah. Fine. Now, once these are done, we can perform the mass copy. Again, when you are copying assets from corporate book to tax book, what are the options are available? Okay, what are the options are available? We have two options. Okay, copying assets from corporate book to tax book, we are copying as a mass copy. So within the mass copy, we have two different copy options. One is initial mass copy. Other one is periodic mass copy. Okay, one is initial mass copy. The other one is periodic mass copy. So initial mass copy means ideally we do this activity during the implementation. During the implementation, we load all the assets into corporate book. Okay. So what are the assets they have as per their current system? Those all will load into fixed assets into corporate book. For that we use this FBDA template. We'll see that. So we load all assets into corporate book. Those all assets are belongs to multiple total assets. Now the total assets you want to copy into tax book. So we use initial mass copy. Initial mass copy, you can copy all the assets irrespective of the assets are belongs to which period. Okay, you copied all assets from corporate book to tax book done. Now we are in the say system went live on the say Jan ending. Now we are in the Feb. Again we purchased few assets, 20 assets we purchased. Now we have to copy end of this month, we have to copy those 20 assets from corp to tax. Then we will run periodic mass copy. We will select period as a Feb. We'll tell to the system only the assets which are added in the Feb you copy from corp to tax. The March also will perform the periodic mass copy. If any assets are added in the corporate book for the month of March, you copy those assets into tax book. Okay, initial mass copy we do only one time. So when we do the implementation, generally we do the initial mass copy. During the implementation, we load all assets into corporate. Those all assets we have to copy into tax book. For that, we use initial mass copy. Periodic mass copy has an ongoing process in every month. If any assets are added in the corporate book, we'll keep adding those assets into tax book. Means we'll keep copying, not adding. Keep copying the assets from corporate tax. For that, we use periodic mass copy. So periodic mass copy means specific period assets we copy from corp to tax. Initial mass copy means all the assets irrespective of period. We copy assets from corp to tax. Initial mass copy we use during the implementation as a part of data conversion. Once we perform the data conversion, once we move the data from legacy to fusion, that to corporate book, will move that assets to tax book. So that's all about initial mass copy and the periodic mass copy. Okay, we will run those. So those two are just two actions. We'll test those. Okay, hope this is clear. Now we'll go and see how to create the tax book, how to assign, running and do assignment. Then we will perform this mass copy options which are available. The same process, there is no big difference. There is a one small point which you have to understand between the corporate book and tax book creation. We created corporate book, same process we are going to follow. Let's see that. Go to setup and maintenance. Here search for asset books, manage asset books. Click on create. Alt INC tax book. Okay. Now, which book we are creating? We are going to create the tax book. So select book classification as a tax book. And yes, we are creating the tax book. And from which asset, which book we want to copy the assets into this tax book, we have to specify. From which book? From our corporate book. So associated corporate book, we have to select our book. Now we are telling to the system, I have this tax book. Into this tax book, I should be able to copy the assets from this corporate book. That's it. Okay. So this is how you can specify. Okay, we are doing the mapping. I want to copy assets into this tax book. That assets I can copy from this corporate book. Can I copy other corporate book assets into this tax book?
I should be.
How it is possible? Here one only you can select. We are creating the tax book.
Here it is not possible, but usually we can have multiple corporate books. Then how we will
No,
do?
who is talking about multiple corporate books? I'm not talking about multiple corporate books. I'm just asking a question. Can we copy assets into this tax book from more than this one corporate book? Not possible. That is the point I
Here,
want to.
here no.
First, I am asking as a
Yeah.
question. Yeah, your point is valid, but we are not talking about it. Multiple corporate books we have. That is other story. Okay. Can we associate multiple corporate books to one tax book? Not possible. That we have to be clear. That is the reason I'm talking about it. Yeah. So one tax book, only one corporate book can be assigned. We don't have any option to go and assign from somewhere else. Okay, book creation time only. We do the type mapping. Okay, so we want to get assets into this tax book from which corporate book? This corporate book. That's all. There is no other changes can be done. Now select ledger. Hope it will accept. Great. And definitely, like your corporate book and tax book ledger should be same. Otherwise, nothing will work. Okay, that is the reason there is no option also to pick some other ledgers. Since you are creating tax book, you selected already corporate book. Corporate book level, whatever the ledger you are using, the same ledger is visible here. Okay, tax book and corporate book should follow the same ledger. You cannot change also, you have to follow it. And depreciation calendar, Alt IRC, and current period. Rest everything system is defaulting. And here you can set to, you can keep reference data set as a common, you can accept this enterprise also, anything is fine. Since we are using common everywhere, let's use here also. Or else you may use very specific only. asset pro-rate convention. When you created pro-rate convention, we used reference data set as a common. That is the reason here also we are giving common. If you don't select common, our pro-rate convention will not be available. So that's how it is. When you create the category against this book, it won't be available. It should match. Our setup level, whatever reference data set we have, the book level, the same should match. Now here, the additional point here is, since it's a tax book classification is tax, system will add one more tab called as tax. Go to tax, you say allow mass copy, enable the checkbox. We are telling to the system, I am creating tax book, okay, and this is a corporate book associated. Please allow this tax book to be copied the assets from this corporate book. That's what we are telling. Okay, you should enable the allow mass copy and say save and close. Just click on that. So that's how you have to create the tax book. Now assign the tax book to FA roles. The task name is data access. Data access for users. Click on add. Username is Alt-INC. Asset accountant. Select security contest as a asset book. Name is Alt-INC tax book. Corporate book already we assigned. So username is Alt-INC. The role name is asset accounting manager. Contest is asset book. The book name is save. Save and close. Click on done. Now submit LDAP. So we submitted. Now assign category to tax book. Go to manage asset categories. Find the categories which are already assigned to our corporate book. Only 2 categories we assigned. The office buildings category we have 10 assets. In shopping complex category we have only 1 asset. Now select office buildings. We'll assign office buildings. If you want to assign both. For our testing we'll assign only the first one. Within the first one we have 10 assets. So select this category. Click on edit. For each and every book, you no need to create the separate categories. One category is enough that can be assigned to multiple corporate or multiple tax books also. One category, you don't need to go with the duplication. You don't need to create office building multiple times because you need the same in the multiple books. No. Create as a one and use in multiple books. Possible. Click on edit. Now this office building category is associated with only one corporate book as of now. Now we want to assign the same category to our tax book. Click on add, select our tax book. And scroll it till down, set all the accounts. Copy, paste and change the account. So building should be billing depreciation or billing expense account. Billing depreciation expense account. This you can fill with any. And go to default rules. say straight line depreciation is applicable here also. But IT Act says you can claim the depreciation, okay, within the 40 years. Set prorate and retirement coming. Prorate means first period, retirement in the last period. How depreciation need to be calculated. Generally, prorate convention means you can take the meaning of first and last. When it comes to selection, two fields they given, but for two we are selecting prorate convention what we created, but just treatment, the separation is different. Separation they are doing, that's all. Now say save and close. Done. Now we are ready with all the setups. Now we'll see how to perform the mass copy functionality.
In any project, how many corporate books and textbooks we have normally?
So it depends. Most of the clients, what they do, they go with a corporate book concept with their each legal entity. If they have 4 legal entities, they'll go with the 4 corporate books. Most of the clients. Some clients.
And accordingly, 4 textbooks.
Yes.
Okay, okay. So like we can create it LE wise, or can we create it BU wise as well? Like if we have 10 BUs,
Yeah,
we
you
create
create
it.
it. You create it. You can how many you can create, how many you want, accordingly you can create. Okay, most of the clients they'll go with the legal entity wise asset books. If they want to maintain the assets, their BU wise, yes, they can create separate.
Okay, okay.
Possible. How most of the cases clients will prefer to have a corporate book or say simply asset books, legal entity wise for each legal entity one.
Okay. And this textbook setup is it mandatory? Like we have to create always?
No. Tax book is not mandatory. Corporate book is mandatory in that specific country. If tax is
Mm,
applicable, okay, and you have to
mm,
report to the government, then only you have to do. Say you
okay.
take example, Dubai, no tax.
Mhm.
Okay. You take
Yeah.
other countries, no tax. Wherever required, then only you have to pay. But corp is mandatory.
Okay, okay.
Yeah. Fine.
And this assignment of categories to textbook. So if we have a lot of categories, then do we have to do this step manually, or is there
Yeah,
any
yeah.
other way also?
Manually, you have to do it one time setup, or else you can use the template also. We have a rapid implementation template also. You can use that and you can load it.
Mhm.
Anyway, you have to fill it,
Okay.
right? Here or there, you have to fill. There it would be slight simple, but here you have to go through the tabs. There directly in the same screen you have to provide.
Okay.
That's all. Here in the system means it's a live data, right? You can select existing. There you have to take care. You have to enter very accurately. By using the rapid implementation template also, you can do that. You can load that categories information. Yeah,
Okay.
fine. So now go to task pan, go to manage all books. Okay. Now here we have a tab called as copy from corporate. So tax book is selected. Here user is able to access 2 books. Okay, 2 books, corporate tax because we provision the access. Now copy from corporate. If you click on copy from corporate, what system will do? It is asking corporate book period. Okay, that means this is which type of mass copy?
Periodic mask.
Periodic. We are talking about specific period. So which period related assets we want to copy from this corporate book to this tax book? The assets which are available in the corporate book. Where is your corporate book? How system will understand? Assets need to be copied into this tax book.
Because this textbook is related to associated with that other
Yes.
corporate book.
Tax book level only we given which corporate book, right? While creating the tax book, we give an associated corporate book. Again, you no need to tell to the system here. Copy assets into this tax book from corporate book, where corporate book period is equal to Feb. When you say it will go to this tax book, it will verify what corporate book is associated with this tax book. From the tax corporate book only, it will copy. Okay, which corporate book is associated with this tax book, from that corporate book only it will copy. Yeah, click on submit. Now assets will be copied into this tax book from the corporate book. To check, go to asset inquiry. So you don't need to select the book here. Ideally, it will display. See here, cloud billing. You have in the corporate book. The same you have in the tax book. The corporate book, you have a depreciation calculator, but if you select tax book, not a calculated depreciation. Now the same asset we have in the two books. Corporate book we have in the tax. Here, value you can see cost. Any asset you pick, ABC building we have. And if you talk about another assets, okay, so just wherever category is not matching and all, it won't take that information. Yeah. So that's how it is. So this is a just periodic mass copy. Now we'll see initial mass copy. Okay, just this is how you can run. This is a kind of regular activity for business. Every month they run. If they want to copy all the assets from corporate book to tax book in one go during the implementation, okay, so we use initial mass copy. That initial mass copy you can run from ESS job page. Go to tools, scheduled processes, click on schedule new process. And here you can search for initial mass copy. So this is a job, or you can say program or request. So perform initial mass copy is the job name. It copies assets from corporate book to current open period in the tax book. Say okay. And we are telling to the system assets need to be copied into which tax book. From which corporate book already mapping is available in this tax book level. Which period? There is no period. All assets need to be copied into this tax book to tax book open period. When we are creating tax book, we given current period as a Feb. Means Feb period is open. Submit. Say okay. Refresh. So why it is ending? Okay, as of now, no assets are there. Again, system identified the point one category is not associated. That's all. This you don't need to consider. Ideally, when you run, all categories are not assigned, the same will happen. Already we copied that assets from corp to tax just to understand we are running. So this is how we can perform initial mass copy or periodic mass copy. Fine.
Sir, when we are copying this, let's say we have implemented the cloud now, so many assets let's say the depreciated value is 80. So it will take, we are moving it in current period, right? But the depreciation would have happened in the last periods also. So which value will it take?
See, we are copying assets. We are not talking about depreciation. Okay, you load all the assets into the corporate book. Those assets you will copy into tax book.
So whatever value is there in corporate, same thing, exactly same replica will
As
happen
it
in
is,
tax.
as it is will copy, as it is will copy. And again, you can start running the depreciation in your tax book as per your tax book rules, the method, lifetime, etc.
Then why are we choosing period? Like, if
Where?
why? I mean, we did this, so we selected the current period, right?
Yeah, just why we are choosing the period that from corporate book. In corporate book, we have assets, right?
Yeah.
Those assets you want to send to which? I mean, see the period what we are selecting. You are talking about the initial mass periodic mass copy, right?
Yeah.
So periodic mass copy, you have to tell to the system, right? You are trying to copy the assets from corporate book to tax book. Okay,
Mm.
corporate book to tax book. Now you have to tell to the system which period assets you are trying to copy into tax book.
Okay, so like while creating asset, we don't select like it will not go to both books, it will go to corporate,
Yeah,
and
yeah.
every
No,
period
that is
we
the
have to.
point. We are
Yes.
creating assets always in the corporate book. We don't create assets in the tax book. Okay, only we perform the copy. See,
Okay, okay.
see if you go here,
Mm.
click on add asset. Here I selected this
Uh,
book, corporate book. I'll
yeah.
be creating asset in this book only.
Mm.
We never create the purpose of tax book for copy only.
Okay, I was thinking maybe it's getting added in both. That's the reason I got
No, no,
confused.
no, we are not
Understood.
adding. See, we have
Mm.
seen just now by copying. We copied and we have seen that you are thinking added. No, no, no. We added in the corporate book, system added the same to tax book by performing the mass copy.
Okay, and when we do anything else like adjustments, reclassification,
Everything,
everything will
everything,
go
everything will be copied to tax book.
with this mass copy only, or it will
Mass
get
copy
on
only.
real time.
Mass
Okay.
copy is the one and only option to copy anything you have in the corporate book to copy to tax book.
Okay.
And
Okay.
you are not supposed to do any action against any asset which is there in the tax book. Okay.
Okay. Okay. So action can be done only in corporate book,
Only
and we can
copy.
only copy it.
Exactly, exactly, exactly.
Okay.
Lakshman, while migrating the data from legacy to Fusion, how do we migrate? Because already depreciation might have run, like a EBS example. In EBS, you already ran.
Yeah.
So while copying, how we will migrating the data, how we do for the
We have
current
a
period
template.
basis.
We have a template. The intent of template, what Oracle is giving for the new assets only.
Okay.
But as per the template, you have to input the values based on that system can calculate and it can take that variances into respective accounts. Okay. We are
But
not
here
going to
I have a
directly input.
same. I have a question, Lakshman. Like I have a in EBS asset. There is a 40 years lifetime, but 20 years completed. Ran the depreciation for the 20 years, but rest of the 20 years I want to migrate that asset to new system. How can I migrate?
Okay. To you have a like 40 years, 20 years, and all okay. So in that case, what you can do is the figures what you have in that asset level. See, you'll have a lifetime as a 40. You take as a 40 only. Okay.
Okay,
There you give date placed in service as a 20 years ago.
okay,
Okay. And you input the value as a what is the original cost and what is the net book value, NBV.
okay,
Okay, based on that system can understand, right? Whenever you load that calculation to take the variance, it will take into the depreciation account only. Remaining value, it will take automatically. It can take based on input
okay.
values. See, I have a like as per my current system, 20 lakhs asset value, 10 lakhs depreciation is already calculated. That it calculated based on when you placed in service, how many months depreciation calculated, what is the depreciation method, right? What is the rate or what method you are following is all it will take into consideration. The same inputs you will provide here. I placed asset in the service 20 years ago, that is the so and so date. This is the original cost at that point of time. Now current value is NBV, net book value is this much. Then what is the variance? The variance it will treat as a depreciation only. Okay, that's how it can
Okay,
calculate and it will take into the system.
okay, Lakshman, got it. Yeah.
We'll see that. We'll see like we have a template for that. Okay, so template level you can specify that details. right?
So one question for this periodic mass copy.
Yep.
Let's say we have now we are in February month and we missed to run the periodic mass copy for in January for January month. So can we run January and February both in February, or once period is closed we can do that?
See, however we open close periods within the corporate book in the same way you will run in the tax book also. Okay, tax book also. Now when we are performing the periodic mass copy, what we are doing specific periods, a specific period, corporate book, whatever the asset you have, you are running. And that time, whatever the open period you have in the tax book, into the tax book, that asset information will take. So you have a John month, you have a John month, and you didn't run that, you didn't copy it. Okay. Another month you didn't copy. All you can copy, you can use initial mass copy now. You don't need to go with each and every period, right? Multiple period assets are pending. Got it?
Okay, so now again I can run
You
the
can run.
mass
Why
copy.
to run 4 periods one by one? You can use initial mass copy, and whatever pending, all system will take into current period.
Okay, okay.
That's how you can manage. Okay. So this is all about mass copy. Any questions from anyone, please? No questions, we'll proceed. Now the next topic is, say, what if analysis. What is what if analysis? This is just analysis. Okay, this is just analysis to understand if we change the depreciation method for specific asset, how it is going to calculate the depreciation in the future. Or else if you change the lifetime of asset, how it is going to impact. So if you simply, you can say, if you change certain financial information for specific asset, how it is going to have impact in the future depreciation calculation, just you want to analyze. You are not going to take any action with what if analysis. You analyze. Based on analysis, you may take some decision. Based on decision, you may take action. Okay, it's kind of analysis. It will generate the report by comparing as of now what depreciation is calculating, and in future how system may create depreciation, may calculate depreciation based on the changes. It will give one kind of view. So accordingly, business can take the decision. Okay, if you change something, what would be the depreciation? Okay, what if say if you change the depreciation lifetime, if you change the asset life from 50 to 40, what would be the depreciation? Or else 50 to 35, whatever it may be. So those you want to analyze, you can use this what if analysis concept. Let's see how to perform this. So very simple. Go to task pan, and before that you can take, okay, fine, that's okay. We'll take the criteria different. Go to perform what if analysis. Now, so select starting period. We want to do the what if analysis for the assets which are in this corporate book, and starting period. Feb I'm taking assets which are maintained in USD currency. Number of periods. We want to run for 4 periods. We want to do analysis. Here is the criteria, and based on what criteria you want to do this analysis. We'll select category so that for all the assets which are belongs to same category, system will create the report for what if analysis. Say shopping, office building. Say okay. Now here is the scenario. What is the depreciation method? What you want to test? Straight line. What you want to test? So already for our assets, we have a like a lifetime as a 50. Say you want to analyze if it is going to be 35. Okay. 35. If you want to change chloride conversion, chloride also you can take as a criteria and submit. So the request has been submitted and you have to run the report. Run this what if depreciation analysis report. Okay, with this request ID. Just you can make a note of this request ID. So make a note of report name also, what if depreciation report we have to run. Only this is a one request ID, it is ending with a 07. It will be available when you run this report. Report name is what if depreciation analysis report. Just copy, say okay, cancel, go to ESS job page. Click on schedule new process. Submit. The book name is Alt INC. Only one request you process that should be available here, which is ending with a 07. Same. You don't need to give other parameters and all. Delete analysis data. Once you run this program, it will display the data as well as it will delete. If you set to no, it will run, it will display the data, it will be available. Again, if you want to run, you can run this report, you can see the data. If you say yes, it will run and it will delete. But you want to keep or else keep as yes, no issues. Again, it won't be available. Keep no so that it will remain again and again. You can run this report and you can see the same data also. Submit. Refresh. Now open this report output. Here you can see this is the depreciation as per the current asset information. Means with a 50 years lifetime. This would be the new depreciation if you change asset life from the 50 to 35. Okay, for all these assets. Given the criteria as a category. So within the category, how many assets we have, all assets system is displayed for the 4 periods. We given when we are running 4 periods, Feb, March, April, May, Feb, March, April, May for each asset, 4 periods. Okay, so it is just displaying how it is going to calculate. This is just analysis, that's all. This based on that business can take any decision accordingly, they take action, whatever applicable and required. This is just to analyze. Just to analyze, we use that. So another point here is we'll see how to retire the asset. Okay, with any reason, you may retire asset. So 100% you depreciated asset, use that asset and you may retire, or else you want to replace the asset. So some latest machinery available in the market, that is the reason you may retire that asset, or else the asset is missing. Okay, some asset, some theft happened in the company, so asset is missing, or else as per your books, we have a few assets, but reality when you cross check in the business, those assets are not available. Maybe by mistake you enter whatever it may be. So with any reason, okay, if you want to remove that asset from the system, one and only action what you can perform is retirement. Retirement reason may be the asset fully depreciated, or else you are just like removing asset in between, you want to replace the asset, And another point is you have a two corporate books. You want to move one asset from one book to another book. It is not possible. Only the option is retire asset in one book, reinstate asset. Add asset in another book. Okay, these are all of the reasons why we perform the retirement. Go to assets. Go to task pan. And here we have a task called as retire assets. So which asset you want to retire? Select if you know the asset number. Just search all assets you could see. Now we want to retire XYZ asset. XYZ asset you want to retire. So when you talk about retirement, you can retire based on number of units. You have one asset with the 2 units. You may retire only 1 unit or 2 units. Or you have one asset with certain value. The entire value of asset you may retire, or else specific cost only you can retire. Okay. So partial units or partial cost also you can retire. So select asset, click on retire cost. Okay. Here you can specify how much cost you are going to retire from this asset. Okay, how much cost you are going to retire from this asset you can give. This is asset value you can give, and you can specify the comments, the purpose why you are retiring and all. Even retirement reasons also you can write here. Okay, and retirement reasons is one of the lookup value. Okay, you can go to fixed assets lookups. From there you can search for retirement reasons. In AP we have seen payables lookups. There we just navigated to pay groups. There we added one value. In the same way, retirement reasons you can add by using the lookup. Those would be available here. You can choose. You can give certain cost and you can retire. If you don't want to retire based on the cost, you can just select asset XYZ, click on retire units. You don't need to, you are not thinking about cost and all. The number of units is the primary measurement for you. You can specify how many total units you have. Only one unit, the same unit you are going to retire, or else you may have 5 units, you may retire 1 unit. And specify this, provide the comments. Okay, now just you can specify any other details here. If you are selling this asset, how much value, etc., you can just give these details and just say submit. So this is how you can just retire the asset. And again, now it's just retirement is ready to post. It will execute it. It will execute the next steps. Say you retire this asset. You retire this asset after retiring. So again, say by mistake you retired, or else what? As per plan you retired. Now again you taken the decision you want to run this asset for a few more months or years. In that case, yes, we have option. You can undo that retirement. Whatever the retirement we did just now, that you can undo. For that, we have a function called as reinstate. Reinstate asset. The assets which you already retired, those all you can see under reinstate. Just click on search. Within this book, how many assets are retired, you can see. These are the only one asset is retired. Now you can select this asset and you can reinstate. Notice one point, we are able to place asset in the service and retire the asset from the service in the same period. We are able to place the asset, we are able to retire the asset from service in the same period. In the same period, we can retire, we can place asset in service and we can retire the asset in the service. Again, if you notice, we are able to retire the asset without calculating the depreciation also. Yep. When you compare with the EBS older versions, certain these actions are not possible. So now Oracle came up with that capability. Just make a note what we can do here. So in the same period we are placing asset, in the same period we are able to return the asset, that too without calculating single period depreciation also. So we reinstated. Now no assets in this corporate book which are already retired, which are available for reinstate. This is how you can perform retirement if required, you can undo the retirement. Okay, that's all about
Sir,
In
how's the
reality,
gain or loss?
Sorry, please go ahead.
Yeah, sir, I was saying that how is the gain or loss is getting accounted? Like, for example, if the asset is of 25 lakh and we have sold in 20 lakhs. So, I mean,
Yeah, that
where,
will become loss. So say for example,
Mhm,
so 25 lakhs asset value.
mhm, mhm,
Okay, already you calculate depreciation 10 lakhs,
mhm,
10 lakhs depreciation. Now you are selling this asset
mhm,
at 10 lakhs.
mhm.
Now gain or loss?
Loss of or 10, 1 second, 15, 5 lakhs loss.
Yes. 25 already 10 lakhs depreciation calculated, 10 lakhs you are
Right.
selling, 5 lakhs is the loss. In the proceeds of sale you will be giving, you are selling at 10.
10.
Okay, that is treated as a loss.
And this will, I mean, accounting wise, this loss will go in the, like, what loss account we gave initially, that it will go in that account.
Yes, yes, yes. The retirement loss, the proceeds of sale loss account it will. And since we are selling, we have to pass entry in the receivables application. We are selling, right? 10 lakhs we are getting.
Hmm.
Okay, 10 lakhs we cannot record in the fixed assets. We don't have any provision of recording the payment, right? You are selling 10 lakhs, you will get. In fixed assets, you can go with any workaround treatment. Maybe you can record one miscellaneous receipt. Okay,
Yes.
saying that 10 lakhs received against asset sales.
So receipt part will be undertaken in AR, like miscellaneous receipts, and
That's what
here
I'm discussing.
as
There is
gain
no
loss we can
connection. There is no connection between AR and FA.
actively.
Okay, this
Mhm.
manual you have to take care outside of this process. Yeah, you have to, like, you sold out, so money will come. Who is responsible to collect the money? Receivables department. They'll create one receivable
Mhm.
activity called as asset sale. In that they'll use the revenue account from revenue from asset sales. Okay. That's
Okay.
how
Okay.
miscellaneous receipt they can create. If they want to create a transaction and if they want to create receipt and if they want to apply, that is also okay. Anything is fine.
Okay.
That's all about that.
Uh, one more
And sir,
question. So,
Yeah.
in reality, what is the meaning of retire cost? I understand retire units. Like, what is a retire cost and when we use it?
See, retire cost, you like units means so you have one building. Okay, you have one building and you are going to retire it. Now you have one asset. The different ways you can represent it. Different ways you can represent the value came down and you want to reduce it. That asset value is not there, or else you take some other cases, maybe some trademarks or like a goodwill, etc., etc. In those scenarios, also, what is the value? Consider that value totally reduced and all that you can do as a uh, retiring some cost, the value of that. What you treated as this is the value came down, and that you can adjust in your system as a retirement. That's it.
So, mostly the things that we cannot really calculate
Yeah,
in units, right?
intangible aspects you
Okay.
can do that. For even tangible
Okay.
also you can do that. Just a value you want to reduce. You don't want to touch. Say unit is one only. Okay, unit is one only. The unit remain as it is. Whatever the validation you did, the validation you identified the value should be less. Directly you may just update as you are retiring it. That's how you can have a treatment for that. Okay, now
Sir,
we'll
accounting entry wise, it would be a reverse, right? In case of retirement, just
yes. With that value, it will be reduced. That is, whatever the asset cost you have, the value will be reduced, right? It will reverse that cost with
yeah.
that
Well,
amount.
so in GL, it would be a reverse entry of this.
No, here also in fixed assets also, when you do the retirement, say whatever the
Hmm.
asset cost you have, with how much value you are reducing, that will be reversed.
Mhm.
The same entries will go to GL. So that no need to think about GL now. When we are in the AP or FA, here
Okay.
itself the action should take place. The copy will go to GL. That's all.
So here we do post to ledger something here, like
Yeah,
when
we
we do
should
any
do
action.
that. We'll do that. We'll do that. We have to transfer this accounting
Okay.
entries to GL from every application. Yeah,
Okay. Okay.
you should
Yeah.
do that. You should do that. From here we'll transfer. So to load assets into system as a part of data conversions, we have a FPDA template. We can create assets within this template and we can load it. But the intent of this template is new assets only. But based on the data, how it is available, accordingly you can input as per this template. Let's see that. So first we'll same process, same standard process. There is no difference what we did in payables or receivables or any other application also. So we download template, we'll just do the same practice. We're not going to discuss again, just I'll copy this. Same process. Download, prepare, generate CSV files. Placing in UCM not mandatory. Populate in interface, import into base tables. That's all. Now, go to Oracle OER. Directly you can type also Oracle OER FPDA template for assets or additions you can type. Cloud applications. Go to financials. All books. You can scroll down or you filter from your implementation. File-based data import for financials. Hit hyperlink. So assets. In case of assets, here we have fixed assets mass addition import. Click on this template. Save. Alt INC. Save in this folder. This yeah, here is Alt INC folder. Now we downloaded template related to fixed assets. Fixed asset mass addition import template. There is a lot of sample data. So remove the sample records except one. One we can use for reference to make our job easy. So interface line number, any unique number you can provide for each asset. One unique number you have to provide. Corporate book name. Whatever the book name you have, provide that you can refer and enter. So Alt INC corporate book. This hyphen USD you no need to give, that is system, just it will pick. Alt INC corporate book. So transaction name, it is completely optional. And asset number we no need to enter. Asset description, just we can say FPDA billing for our identification purpose, recognition. And no manufacturer is applicable for this, no serial number, no model. Yes, asset type is capitalized. Cost of asset is 60 lakhs. So date placed in service. Look at the format of the date, year, month, and to date. So you just set month is Feb, date is 24th, By default, system will take current date. Okay, system date it will take. That is reason if you look at this field, it is not mandatory. But anyway, we given like today date, year, month, and date. And prorate convention. Okay, this all system can default from the category. Still, if you want to give, you can just provide that prorate convention, etc., etc. So what you can do is go to asset inquiry. Open any one of the existing asset. Here is the prorate convention. It's optional. You want to provide, or else system will direct. Okay. Right. Number of units, provide number of units, and provide category information that you can copy from here. The category information you can see. This is the category information. Take this value. Just type it. Don't bother to play with around. So the name is XX building, right? XX building. Okay, XX building. Other one is office building. Office building. These are the two segments we have as per category. And post status you can keep as a post so that directly asset can be created. Otherwise, if you don't want to create directly, you can keep as new. Okay. So this you can leave like you name automatically. This it will take automatically. Like from which system you are bringing, you may write. So asset key, say how you want to take as default. Rest of details. So depreciate and other information. Okay. So depreciation method. Okay. If you want to take, you can take. Otherwise, system can default. STL straight line. Okay. Say we want to take 50 years. Give it life. You can take life. Straight line depreciation we are taking. So 50 years means 600 months. Okay. That you can provide life in months. We have to provide accordingly. It will take the years. And provide this asset clearing account. It is not mandatory. If you want to enter, you can enter. You have to pick this information. Go to add asset. Search for asset clearing account. That is 17710. The total 5 segments we entered. And total we have 4, 5, 6 segments. Okay. Total 6 segments we have. 5 segments, enter one more. Six segments. Okay, done. Check other columns also. Verify because there could be some sample data which Oracle is providing. Sample. Okay, cool. So FA mass additions. This is one sheet within this template. Other one is FA mass addition distribution. Here distribution is nothing but asset assignments. The asset is associated with which employee and which expense account, which location. So those details we have to capture here. Remove the sample data and units are one. Here interface line number is same. One should match. So that system will understand these both lines belongs to same asset. This is the header record and this is the kind of asset assignments. And location information you have to provide. Asset location. For that you can copy the data from here. So country value already you can see here USA. And second segment California. Third segment city Atlanta. And fourth segment, say we want to use office. Done. Now provide expense account, depreciation expense account. First segment value is 1000, second segment 1000, third segment is account. You take depreciation expense account here. Sorry. This is the account, which is the depreciation expense account. Total 6 segments. Done. Okay. So this is how you have to prepare. This is a different, like if you are dealing with a different currency asset creations and all rates you have to maintain. So these are the two sheets. Okay, FA mass addition and FA mass addition distribution. Distributions are nothing but asset assignment. Okay, asset is belongs to which employee. If you give employee email ID, it will derive the employee name and it will add that person name to asset assignments in the asset record. So prepare the data. So now just
Lakshman,
CSV file. Yeah.
here that asset when you migrate from legacy, how we do the NBV value and all where we can mention here.
We have a relevant fields. We can enter all those. Asset value we are giving and other fields also we have. So those you can input based on that it will calculate and it will take the right amount.
Okay.
Take into same folder. Alt IMC. All right. The file name is FA mass additions. So yes. We have multiple sheets, so multiple files it is generating as a CSV file. All CSV files generated are all captured into one zip file. Now follow the standard process. Okay, follow the standard process which is applicable for any FPDA template. First, we have to submit load interface file for import. Schedule processes. Schedule new process. Load interface file for import. So what is the import process we have to use? That you can infer from this page. Post mass addition is the program name. Click on drop down. Here is the post mass additions. So pick our file. File we have in our machine. Choose file, desktop, Alt INC, FA mass addition file. Select and say OK. Submit. Say OK. Refresh. So we could see the job status. Okay, load interface file for import. Still it is stating as running. Let's wait. Yeah, succeeded. Now data is populated into these interface tables, these two tables, because the rates information we didn't load. These are the interface table names. In these two tables, it will load. The next, again, we have to run the same program so that the data can be imported into receivables from the mass addition interface. Post mass additions. On to, it means edit import. Something went wrong. Let's refresh, right? Some programs here and there you come across, it will complete and it will state the status as a succeeded, but inside you have to see, then only you will understand. We'll try. Post mass additions. It means you are not able to find your book. Here we have to understand the records are not loaded. Load interface file for import. See the output file. Any error? One row successfully loaded. Total logical records loaded. One. check another file. One row loaded successfully, that is ours only. Okay, seems to okay. Okay, fine. We are trying to run this program. Okay. Yeah, we set the status as a new, that is reason we no need to run this. Okay, ideally it will true. Fine. This is not required. Second program you no need to run also. We set the status new. So ideally for other applications, it will go and sit in the interface. From there we have to import. But in the case of fixed assets, it will show from here. You can go and see that record from this asset workbench. You set the status as a new. Here is one. You click on this incomplete. Okay. It should display here. This is incomplete. Refresh. Or else if it is ideally it has to display here. If you click on this, or else you go to other task. Prepare source lines. Okay. You just search. It should display which is there in the interface. This is only XYZ asset. It is different. This is different. Why it's not? It is populated. So click. It has to display. So functioning will log out and log in and will try. Click on incomplete. The record should display here. You click on incomplete. Do one thing. These additional sheets it will add whenever you create that file that I'm removing. I'll say line number 2. I will give. Building 2, FPDA building 2 I'm giving. Now that I'll generate one more file. Let's see. One second before we generate. One second, please. Okay. What we will do is, Finally, it has to display. It was showing, but it is when you click, it is not displaying. So for that, we'll make the status as a post. Name also make it as a post. Then directly it will be created from here instead of going with intermediate step. It will support directly. It's showing, but it is not displaying. When you click, one is showing, but it is not displaying. So let's directly post it. FA mass solutions. We saved it. Save with the same name. Just one more. And the alt IMCRI we are saving here. I'll take 1, 2, 3. For different sheets, different CSV file system creates, accept. Done. So go to tools and schedule processes. Job name is load interface file for import. Post mass additions. Select file. Here is the file, FA mass additions. So it will populate the data in interface tables, and that directly you'll be able to see from the fixed asset. Since we given post option also, it should post that asset at the same time. Like you can go to assets. Yeah, now see, this is
So when we have to run the second request post mass addition for new status or for post status, when we are giving post
Yeah.
in template or new in template?
See, in two cases, asset record will come here. Okay. So instead of clicking on this, instead of just going here and changing the queue status from new to post and all, directly everything you can give in the template and you submit, then it will convert into asset. So I'll explain you. So template level you are giving the post. Okay.
Okay.
Now what you have to do? When you just submit this program, it will come. I mean, when generally you give as a post, when you are providing the complete information, no further validation is required. You can give as a post. Then it will come here to, it will come to fixed assets and it will be ready to post. It will post automatically. If you set new, it will come here, the status will become new. You have to change to post, then you have to just release that record to be posted. Means you have to manually perform that action. Manually perform. Even if you go and run the post masterization once again, status is new, right? Q status is new. It cannot be turned into asset. Now we got another asset. See here. Let me refresh this page. So this is asset is coming from FBDA template. Okay, this asset is coming from FBDA template. See, so directly it is showing the status as ready to post. Now I can click on ready to post, select record and click on post. This will be converted as asset. I no need to do any further validation of this information. Okay, just select and post it. Or still, if you want to verify, you can open this record and again you no need to change the status to post. Already post only you selected in the template. But invoices which are coming from the spreadsheet with the status new, those directly won't be available to ready post. It will show as incomplete. That incomplete record you have to open and go to actions, click on edit. There you have to show status would be new that you change to post and you change the information. Then you can perform the action called as post. That is the difference. Okay, if you
Okay.
want to verify, if you want to validate the record before posting, keep the status in the new. You are entering very much validated data in the template means directly keep the status as a post. Directly you can submit. In case of new, you have to change the status from new to post. When you change, after validating the data, somebody look into each and every record. If they are okay with the data, everything is fine, then they'll change to post. That can be posted. That is the difference. Okay.
Mm.
Yeah. And another point is, so creating accounting entries and transferring to general ledger. Okay. So what are the activities we did in the fixed assets? For all those, you can create accounting entries and you can transfer to general ledger. Now you can just go here, go to a create accounting. Select application as the book name as Alt INC. And the final mode, everything is fine. Transfer post in the GL. Yes. Now submit. For all the event classes, whatever we have in the fixed asset, system will calculate, a system will create the accounting entries. We are not talking about depreciation. So whatever we have, it will just create accounting entries for all the events. If you select Feb, so total 12 assets we have. For those 12 assets, it will just complete it. So for it will create accounting for retirement, what activity we did, reinstate we did, that also it will create it. That means it will get reverse that information. So that's how for everything, for all the events, system will create accounting, it will transfer to general ledger application. Go to GL journals, the accounting entries will flow. When you talk about closing the period, that is totally different. You have to perform the action which is related to depreciation. Manage journals. Source is assets. Search. So all the activities what we did. Okay. So system is sending the data. Now you switch to here and you take the action to close the period. Assets. Now period is open. Now select close period. Click on close period and say yes. Refresh this page. Now you will see the period as open period as March. Now Feb period is closed. In the March month, you don't have any assets. Okay, this is the action. When you talk about closing the period, so this is how you can take the action to close the current period and to open the next period. Okay, before you just do the closing and opening, you can create run the create accounting or else yes, you will later also you can run the create accounting. So these are the points we have to understand.
Lakshman, when you close the period, it will calculate all the depreciations, right, which are missing also.
Yeah. It will calculate. We'll go and see that. Go to asset inquiry for all those, all assets. It will
Okay.
calculate. Maybe already it may be in the draft mode, but again it will create final mode. So just check any asset. Go to depreciation. So this is the depreciation it calculated. So we just, if you click on view accounting, okay. So this is accounting it triggered. The depreciation expense account is debit, and accumulated depreciation account is credit for this. So we submitted, we closed, and it will trigger the accounting entry, and it will run that program. So that's how the activity what we did, the system created accounting accordingly.
Sir, if we
See,
this create accounting, okay, yeah.
please.
In this create accounting, it's happening at one go. If we have to, let's say, if you've done some reinstatement or retirement, so is there any option
You
like
can
we
run
want to
again.
place a particular?
Run again. What it will do is for which event classes accounting is due, accordingly it will trigger.
Can we not do it like the way we do in ARAP post to ledger? Can we not do that thing here? Post a particular thing.
No. Actions. You are mentioning like actions. Actions wise, they didn't
Yeah.
give here for each and everything to perform relevant level. They didn't give. If you want to do like that, what you can do is you have to
Mm-hmm.
do from here only, but you have option to select for what process category you want to do. Only you want to run the accounting for additions.
Okay.
Yeah. So
Yeah.
you don't want to run the depreciation. I mean, you don't want to run the accounting for depreciation activity. Okay, only addition.
Mm-hmm.
Assets what you created. And whatever other activities you did within the fixed assets, you don't want. If you want to do it for all, don't select anything.
Okay. So I mean, asset wise, one particular thing is it's not possible, but here
No.
category wise we can do it.
Yes.
Okay.
Category in the sense it's not a category classification of event classes.
Mm-hmm. Right.
Category not.
Right.
Yeah. So that is the point we have to understand.
Lakshman, first we can do this depreciation period close, then we can transfer GL.
Yeah, you can do that. You can just close it and you can perform that accounting later also.
Okay, thank you.
So you can do that. So that's all about these assets.
Lakshman,
Yeah.
if you have two books we need to do separately, right? Tax and corporate book,
Okay.
clear accounting.
Two books. Go ahead. Corporate and tax book, two books. Yes. What is the question?
Yeah, we have to do multiple times, right? Create accounting.
Yeah. You see here, yes, you have to run the depreciation separately. Now you'll go to tax book. As per tax book, Feb period will be open. If you click on Feb, you see how many assets are there. Only 10. We are supposed to have 11, but one category we didn't map. Within the category, one asset we have. Now you have to run the depreciation. If you want to copy, you can copy from corp to tax. Okay, if any additional assets, click on copy. Okay, so corporate book period is open period is March.
March 24.
Yeah, the same. Run. If any additional assets you have in this, yes, that it will update. So this action you can perform anytime here. So along with that, you have to run the separate depreciation in this. Just submit the draft mode or final mode. The same way if you are going to run the create accounting, go to create accounting. So now you want to run the accounting for what you can select. Select this, and you can create accounting and all. Okay. And another point, notice we don't send the data to our primary ledger. Okay, our primary ledger. Ideally, we send the data to secondary ledger if business required. Secondary ledger will see in the as a part of GL. So when you are creating the tax book, if you don't want to send the data anywhere, okay, you can choose that book and you don't set post to ledger checkbox for the tax book. When you create the tax book, don't enable post to ledger so that you are not going to transfer any accounting information from your tax book to GL. It's a duplication. Already as per Corporate Act, you are sending the data. The tax book data again you no need to send to GL. It may be slight variance or same. It's a duplication. If you don't want to send, don't send, or else you send to your secondary ledger. Secondary ledger is separate concept will come across when you are working on GL. So you can send to that book. Yeah.
Okay.
So that's how it works. We don't send tax book accounting information to GL, corporate, primary ledger. That is a note.
Sir,
Lakshman, reconciliation.
Yep.
yeah. In AR and AP, we do a reconciliation before closing, right? So do we not have any reconciliation here? Like we have this control account or
Yeah, you can do that. You can just take asset. If you go to asset, what I can say, uh, financial category, there you can specify account as a so and so account.
Mm.
I mean to say like a financial category you can give and you can run the report and it will give you the results, like you can cross check between these two applications.
so here it like there it's accounts payable, accounts receivable. Here, which account it will be?
So here you can take that asset cost account, you can take asset cost, asset depreciation. Here it's not specific. See, there why we are doing is very primarily there are two cases you are dealing with a business like suppliers and customer. This is internal. How you plan accordingly, you can do that. Mostly we run the some custom reports to cross check between. That's how we do. Still, if you want to do, like you can select, you can run this
Okay.
for asset cost and asset depreciation accounts. You can make those as a financial categories, and you run that program, prepare and do review that reports. You can
Mhm. So
any
here it's not
application you can apply
mandatory.
that.
Here,
Sorry,
here it's not mandatory to do that. We can directly close
yeah,
the
not
period.
mandatory, not mandatory.
What is the
Okay.
financial category for that asset, right, Lakshman?
Yes, yes, assets. So what we'll do is in tomorrow's session we'll close cash management. It won't take much time, so limited activities, primarily reconciliation, and we'll start with GL application also in the tomorrow session itself.